Hey everyone, and welcome back to the channel. If we have not met yet, my name is Mark Rusin. I am a CPA and not a financial advisor. The roller coaster of a year continues in the stock market, and the Fed is off and running with their new Fed policy to fight surging inflation. By the time this video is out on Wednesday, we will have seen the release of the latest March CPI numbers, which I fully expect to show yet again massive growth in inflation numbers. This has had an impact on everyone, from consumers going to the grocery stores, out to the restaurants, or even to fill up a tank of gas. It has also impacted companies who are seeing a surge in costs that they are passing on to consumers, and of course it is impacting the stock market. The first 2.5 months in the stock market here in 2022 got off to a rather rough start, especially for growth stocks. But since then, the second half of March, we saw a very strong bounce back in the market, which really helped our portfolio, which I will show you here in today's dividend portfolio update. And if you saw my March portfolio update, you noticed that in January and February, respectively, our portfolio overall was down 1.95% and 2.55% respectively. But as I stated a second ago, March was a very big bounce back for us as we increased the portfolio value over $10,000 as we saw it bounce 5.5% for the month of March alone, which is rather remarkable. Now, March was rather good, but again, here we are in April and we are seeing much of what we saw those first 2 months. We're seeing a return of volatility and growth stocks yet again being hammered. But I'm here today to give you an April dividend portfolio update. So with that being said, let's get started. If you are a current subscriber to my YouTube channel here, I just want to say thank you. As we continue to grow this channel, as I'm looking to pass on financial knowledge that maybe I didn't have when I started, just to try and help you meet your financial goals moving along. But if you're new to the channel, consider subscribing. If you love dividend stocks and passive income, then this is the YouTube channel for you. As always, everything shared in this video today is for educational and informational purposes only. So any stock or ETF mentioned is an opinion of mine only, and do not take it as financial advice. If you're new to investing or looking for a new investing platform, then check out M1 Finance. Down in the description below, I left a link where for every new account, they will give you free money just to start that new account. So definitely check that out. It is a great platform for buy and hold investors. All right, if you love dividend stocks and passive income, then do me a huge favor and click that like button down below, as that helps the growth of this channel tremendously, and it helps out with the YouTube algorithm as well. Now for the dividend portfolio update. Let's first take a look at where we were a month ago. In mid-March, the account was sitting at roughly $193,876, as the portfolio was down $6,400 or 3.2% on the year to that point. Now let's fast forward to where we are today. Bam! And here we are with the market value of the portfolio sitting at $203,226, roughly a $10,000 gain since the last time that we spoke. The unrealized gain and loss is sitting at $23,972 with roughly 13% gains. Those are just the gains I'm sitting on right now for stuff I have not sold. The year-to-date gains right now is roughly $3,000, and the year-to-date percentage gain is roughly 1.5%. Our annual dividend income is now up over $5,000, sitting at $5,066, projected from right now over the next 12 months that we can expect to receive in annual dividend income. Just for comparable purposes, looking at the S&P 500, as that's the benchmark we're going to track with this portfolio, the S&P 500 is currently down 8.3% year to date. And as we see with our portfolio, we are up 1.5%. So roughly 10% we are higher than the S&P 500 right now with our dividend portfolio. As mentioned, the month of April has seen a little bit of a return of volatility, and the S&P 500 is down 4.4% on the month, and the NASDAQ, though, is down roughly 7.5%. So with that, growth stocks are still being tossed out of portfolios as investors run for safety, and they're looking for high quality and cash flowing companies, many of which are in our dividend portfolio. So the portfolio is green, the market is red. I am a happy camper with that right now. But the markets still have a lot of headwinds and a lot of uncertainty. Uncertainty around the Russia-Ukraine crisis, uncertainty around the Fed's plan. How quickly are they going to unravel their balance sheet? How quickly are they going to raise interest rates? There's been a lot of comments on that in the news of late. Uncertainty around how long inflation will last like this and be at highs that we haven't seen since back in the 80s and 90s. And uncertainty about a pending possible recession, given the inversion of the yield curve we saw recently with short-term bonds and long-term bonds inverting, which over the past decades we have seen has followed with a recession in the next 6 months to 2 years. All of this impacts growth stocks in a number of ways. Now, this doesn't go on to say, get rid of all of your growth stocks. Don't own any growth stocks. That's not, and only own dividend stocks. That's not what I'm saying at all. I own growth stocks. I own ETFs. I own dividend stocks. I own REITs. The point here is to have strong diversification. The point here is to also have a strong foundation. And that's what I believe this portfolio will show you. You're going to see at the top is going to be strong, broad-based ETFs and high-quality companies. And we will build out around that and add risk as we go on. So with that being said, let's quickly look at the top 10 positions in my dividend portfolio. Still the same at the top is really unchanged with the Vanguard S&P 500 Index Fund, stock ticker VFIAX, currently with a weighting of 10.8%. That's followed by the Vanguard Dividend Appreciation Index Fund, which has a weighting of 8.1%, call it. Followed by AbbVie, which is my largest single stock, a BBV, and that has a weighting of 5.77%, followed by Bristol Myers Squibb, Johnson & Johnson, Lockheed Martin, Apple, another S&P 500 index fund with Fidelity, a Schwab dividend ETF, stock ticker SCHD, and Vici Properties, which is my largest REIT holding, currently in the top 10. Now, if you take a look, you could see the weighting of these top 10 positions. When we look at all of them together, that equates to roughly 57% of my entire dividend portfolio. You can quickly now take a glance at many of the other positions that I have, and then you could see that cash has fallen now down from, I think it was roughly around a top 10, top 15 position in the past. Now it is down to the 23rd largest position, as I did make some purchases over the past month. Next, now we're moving to the dividend calendar, which you can see this is just going to track the dividends we are actually getting paid on a month-in, month basis, and you can kind of just see what you can expect. So in March, we got $510, which was our largest month to date so far and really ever. And the month of April, we are expecting roughly $360 for the month of April in dividends. This next tab here is going to be our portfolio performance, and you can see here in the month of March was a mammoth month. We gained $10,593, and the portfolio overall in terms of percentage gained 5.5%. That was great considering January and February were rough months, and so far in the month of April we are positive barely by 0.62%. So we've put on back around $1,200 so far in the month of April. Now let's take a look at Seeking Alpha, where I've uploaded our portfolio here just to kind of track performance-wise. So looking at the current dividend portfolio over the past month, which is around the last time that we did a portfolio update for you, you can see that AbbVie, which is my largest single holding that I have and one of my favorites, AbbVie and Bristol Myers, two of the two largest actual single stocks that I own, are up a mammoth 14% and 11%, which is just awesome. Those are followed by Iron Mountain, which is a REIT, Public Storage, and Realty Income round out the top 5 in terms of top performers over the past month. Now, if we want to flip that and we want to look at the laggards in the portfolio over the past month, we can see Qualcomm, which has been under intense pressure, and I've been adding to this position just to kind of do a dollar cost averaging. Simon Property Group is down only 2.5% over the past month, and Starbucks has been in the news a lot lately. Howard Schultz is back on an interim basis as CEO. That stock is also down roughly 2.5% over the past month, followed by Bank of America, and those are really the only stocks that are in the red over the past month. So the portfolio has really performed quite well over the past 30 days. So really, in terms of transactions over the past 30 days, I really haven't made a ton of moves one way or another, just really trying to feel out what the Fed is doing. Are we going to be raising 50 basis points each and every month? Or are we going to take this a slower approach? Are we going to have a hard landing, a soft landing? What is the plan here? And then just really looking for opportunities in the market right now, since a lot of investors are moving towards higher quality dividend type stocks with strong free cash flows. Valuations are getting a little bit more mixed and not as great of a deal as we've seen in the recent months or so. So in terms of transactions right now, the really only transaction I made was adding to my Qualcomm position. So I added a little bit early, added 9 shares at roughly $157, buying $1,400 worth of Qualcomm at the end of March. And then just recently here, last week, I added another 3 shares of that Qualcomm, just really dollar cost averaging. So that's roughly another $440 of Qualcomm. So Qualcomm was the only one that I added to over the past month, and just starting to build up a watch list, because I believe that we are going to go through a period here where we could see some more selling pressure again. And that's when those opportunities will start kicking up again, and we will start looking to put our money to work that we have. So with that being said, there's just not a ton of opportunities right now that I am finding in the market. A lot of investors are running for dividend type stocks, those higher quality, free cash flow driving stocks that we have a lot of those in our portfolio right now. So we're just looking, and I believe I'm trying to build up that cash position, as I told you guys in the Dividend Investors Edge, my weekly newsletter that goes out. So if you haven't signed up for that, I will put that down in the link below, where I shoot out a free newsletter every Monday, just looking at the market in the past, the rear view mirror, and then what is the plan ahead for myself. So in that, I just wrote that I'm looking to build a little bit of a cash position right now and see if we get some opportunities in some of these high quality dividend stocks that I've been keeping my eye on of late. With that being said, this is your April update. I hope you enjoy it. And in the comments section down below, let me know what the latest dividend stocks you've been buying. And what have you been doing with your portfolio right now? Are you adding to positions, or are you looking to build a cash position right now, believing that we may see some more selling pressure and some better, frankly, opportunities in dividend stocks? And if you haven't done so yet, make sure you click that like button down below, as that helps us out tremendously, both with the growth of this channel and with the YouTube algorithm. And if you haven't seen my latest video, I discussed 2 must-own REITs that I believe should be in your portfolio, especially with these high inflation numbers that we've been seeing. I think you would really enjoy that video. And with that being said, we will see you in the next video. Take care.